Stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I'm Yatin Mota.
Well, Yatin, how overwhelming is it to look at the screen today? It's a 320 point cut on the Nifty. In fact, we breached that 200-day DMA level also on the Nifty. That stood at somewhere around 23,530, I beg your pardon. And we have breached that level in intraday trade. The broad end of the markets were bleeding.
Absolutely.
And bleeding is an understatement, right? If you look at the advanced decline ratio, almost 1:10. That was the advanced decline ratio. And if you look at the Nifty, just about 3 or 4 odd gainers.
All sectors in the red.
All sectors, and the Nifty Bank Index also, breached that 50,000 level. All key DMAs, 50, 100, they've all been broken on the Nifty Bank Index as well. So yes, it was a bloodbath and midweek crisis, kind of
Correct.
thing that emerged. And talking about the kind of losses that you're staring at, investors have lost almost 20 lakh crores in a matter of 3 sessions, and with the blink of an eye, 500 points shaved off from the Nifty.
Absolutely.
In the last 2 sessions. So it's not really a joke. Look at the index itself, 10% off all-time highs. So you can say that the index has actually entered correction zone as well. And of course, we may say that we have decoupled from global markets, and of course, we've seen the kind of sell-off that FIIs have resorted to, right? And a lot has to do with what's happening with the dollar index as well. Very close to that 106 handle, and with the way FIIs have been selling, that could actually become a problem. I don't know how much of a support can DIIs really provide, because you need support from FIIs also, right? But they have been selling incessantly, and there's no stopping that.
Absolutely, and it's not only the FII selling, but I think the domestic mutual funds are also limiting themselves. Not much of gunpowder left for them as well. Most importantly, Q2 earnings was a washout. The inflation data spooked the markets. Not only that, I think the market is also looking at the Trump official appointments that he is right now doing. Yesterday announced that there will be a DOGE department which will look at government excellence and trying to trim and remove red tapeism, with Elon Musk heading that particular unit along with Ramaswamy, who is an Indian origin American there in Trump's team. So I think a lot of disruptions expected globally. I think inflation data continues to vary investors here back home, and FI selling doesn't stop. And as you're mentioning, that 200-day moving average also being tested today, quite important for the markets to hold that level. Whether or not we hold that or breach and try to test the election day low, because the day the Lok Sabha elections came in, we saw 10% dip on the markets, and that level is around that 22,000 level on the Nifty. So whether or not there is more downside to this fall, or probably 200-day moving average is something that investors would watch out for value buying or probably nibbling into select stocks is to be seen. But yes, I think the markets have been quite brutal, especially for the last 10 days or so.
That's true, Yatin. And portfolios bleeding, investors are in a panic sell mode, because whenever we see some kind of up move, that gets sold into, and we've not been able to hold on to any kind of rebound that we have seen sporadically. But let's bring on board our guest for today then. Joining me is Ashish Bahety, who's a technical and derivative research analyst. Ashish, investors have been spooked. We've seen 500 points being shaved off from the Nifty in the matter of 2 sessions. Broader markets are bleeding. What's the sense? Do you see more sell-off here on? And if yes, what is the level that you'll be watching out for on the index particularly?
Good afternoon, Nandita and Yatin. It's been almost 1.5 months since Nifty have not even able to surpass its 20 DMA. Any attempt to even reach 20 DMA was always failed, and today the Nifty touched its 200 DMA. It's a crucial zone from technical analysis point of view. If this breaks, almost you can say the hell will break loose, at least on technical analysis terms, because below 200 DMA it is considered as a every rise should be used as a shorting opportunity. However, we think it should act as a support right now. Otherwise, it will turn out to be a resistance level for Nifty. So keeping finger crossed, we think market will want to stabilize here, or should stabilize here for at least for some time. The best part is almost we are coming close to or almost we are at the end of the earning season. So whatever the bad numbers were supposed to come have already come in. Now, at least there's no reason for the knee-jerk reaction for the market to short. I mean, from here, we may see on the global cues, market may fall from here, but domestically, it looks like everything is getting somehow priced in. We're expecting market to stabilize here, but it's too early to say. To give a stabilization, even to have a stabilization on chart, market should at least keep the base of 23,500 intact.
Right. Yatin, would you like to come in here?
I think, one thing, Ashish, that I would want to know, as you mentioning that 20 DMA is something that the markets could not bounce back to. Now we are testing 200-day moving average. Do you think there is a probability still in the market that we might test those election day lows? Because I think that is also one crucial point that the markets are watching for, especially when you are around that 200-day moving average with bad inflation data, bad Q2 numbers. Do you think the fall can accelerate from here, or the markets will probably look to consolidate at 200-day moving average?
Election day low is very steep. It's still election day low was actually 21,280. So that's another 2,000 points from here, approximately 2,200 points from here. Even yesterday, election day close itself was approximately at 21,884. So that itself is 1,500 points. I think market should stabilize here. There's no reason for market to fall at least another 10% from at this point. The thing is, for market to stabilize, the giants, at least the Reliance and HDFCs, should have to stabilize. We have seen last 2 days, there's a brutal sell-off in HDFC Bank, which was showing strength. Now, this is turning out to be a weakness. And if the HDFC fall doesn't stop here, because HDFC 200 DMA is far deep right now, it's still at 1570. That's 100 points from here. So if the HDFC bank has to go and touch 200 DMA, then yes, we may see another fall in Bank Nifty and Nifty from here also.
All right. Talking about Reliance Industries, you mentioned that stock as well, right? Would you say that the risk reward is looking favorable now, because the stock has been underperforming right here on? Are there any reversal on signs of reversal on charts?
No, it's too early, because it's too early. Even on the hourly chart, we are seeing there's no support or there's no strength in Reliance Industries. Forget about 200 DMA; it has not been able to cross. It's the nearest 10 DMA also. So even there's a selling coming in on a daily chart from the 10-day exponential moving average, and it is constantly touching its Bollinger Band lower bands. I think to stabilize at least, or to even find a buying opportunity, it should stabilize and it should give a close at least about 1270 zone.
Right. Another thing, Ashish, HDFC Bank, despite the flows on the MSCI rebalancing front, that stock continues to remain weak. Be it Kotak, Axis, IndusInd Bank, all of these private sector banks are, witnessing some decent amount of selling. Obviously, one reason being the FI holdings and all of these stocks are quite high, and when FIs are sellers, typically these financial stocks fall down. In the private banking space, anything that you would watch out for, or try to buy at lower levels, or do you think right now all of these private banks are still vulnerable to decent amount of correction?
Yatin, we are not buying anything right now in this market except for the IT. So banks are off the radar for us, even for buying. In fact, everything is off the radar for buying. Only thing what we are buying is, or even looking opportunity, is probably only IT. And for us, the shorting radar our shorting radar is only the PSUs. So be it PSU banks or public sector enterprises. So yes, we are seeing there's a good opportunity to short in public sector banks, specifically Bank of Baroda. The way it has fallen today, 3.5%. Yesterday gave a close below its 200 DMA. And today was a brutal sell-off today. So we may see another selling exaggerating from here. And Bank of Baroda may touch even 230, 235 zones. So another 10, 15 rupees fall can be possible from here in Bank of Baroda. So that is one space we'll be looking for a shorting opportunity. On the private sector banks, we are just wait and watch strategy we are using. So we are not shorting them. But yes, there's no buying, at least on the cards right now.
Okay, two pockets that have come under intense selling pressure are autos and metals. On a daily basis, we see the Nifty Metal Index emerging as the top laggard. Today as well, the likes of Hindalco, Tata Steel are among the top Nifty laggards. Look at Hero Moto, that's the top Nifty laggard when it comes to the auto space. Any stocks that you would see as shorting opportunities in these two pockets now?
So yes, in metals, there are a lot of names which is looking good for us as a shorting opportunity, specifically on the public sector side. We have already been given short multiple times on sale. We think it's already touching its 25th October low, and if that gets broken, the next support area would be 105. So yes, sale and even Tata Steel is a good shorting opportunity. From the non-ferrous side, I think Nalco and Hindalco both are looking weak. Specifically Hindalco, the way it has reacted on post its numbers, both Novalis and its own numbers, there's a weakness persistent on the chart. And today it broke its 200 DMA, Hindalco, I'm saying. So, it might even touch its 600 from here. So another for 25, 26 rupees fall is possible on the charts. One can keep a stop loss of 641 in Hindalco.
Right, Ashish, and in general, if you look at the overall mid-cap scenario, defense PSU stocks, mid-cap pharma stocks, or probably stocks which were once market darlings, the likes of Suzlon, the likes of Inox, all of these stocks are also witnessing some bit of selling pressure. In fact, a few of these defense names are down 40-50% as we speak. Stocks like NBCC are down 20-30% from recent highs. So, overall, Ashish, what's your sense? You mentioned that, in the PSU banking space, Bank of Baroda even looks vulnerable. Do you think, all of these PSU defense names, few, mid-cap stocks which saw a good run-up, which have corrected 30-40% are still vulnerable?
It is. I think for the PSU, specifically for the PSUs post, I'll say even the election, the shine is over. We may not see those levels coming back in the recent terms. I think the money shifting back from the PSU, we have seen a wonderful rally in 2021-23 until even before election till 2024. Post-election, we have hardly seen any PSUs outperforming the broader market or the broader index. And there's no relative strength in the public sector enterprises whatsoever. So one should absolutely stay away from these stocks. If at all they have to buy, I think some of the FMCG names and even auto, might turn out good in this fall. So one should stick to the large low beta stocks in these fall.
What about BSE? That was also a market darling at one point in time, right? Numbers were pretty good, but the stock, of course, in line with what we saw in the market, saw a 4% cut. Today, the stock has seen a fair bit of correction as well from highs. But with the SEBI's new regulations coming in, there are concerns about F&O volumes being hit, right? So, with that in view, would you expect more sell-off? And if yes, what is the kind of level you'd be watching out for on the downside? Because today Jefferies came out with a report on BSE and they have, set a target which is 1,000 rupees, lower than where it's at right now. So what would your prognosis be on a BSE?
Yeah, I mean, as a trader for us, it was a last day probably to trade a weekly Bank Nifty options expiry, and it was probably a emotional day whatsoever. BSE, yet the volume has to shift back the option volume, and it's hard to say how much the advantage they'll want to get from this weekly expiries. So yes, one can go long in BSE, but probably at a level of 4,200. Yet it's above 220 DMA zone, and it's 200 DMA, it's somewhere around 3,000. So there is a huge gap between this. So there can be a mean reversion here also. So 4,200 zone would be a good zone to go long in.
All right, for 200. And anything that's looking worth a buy, as in you said that you won't be buying at the current juncture aside of IT, but for those who are looking for long-term bets, given the kind of correction that we've seen in some of these stocks, would you say that there are certain pockets that still warrant a buy?
It's very, it's very hard. So I think the best way to go long in this market would be probably through the ETF. Nifty Bs and Bank Bs are the only thing which is, as safer, and one can even average from here also. So every dip can be used as an buying opportunity in these ETF rather than going individual stock, because we don't know where what is hidden in the closet. So ETFs are the most safer bet, specifically ITBs.
ITBs, yes, I think that's it from us right now. Ashish, Bahety, thank you so much for talking to us, especially on a volatile day. When it comes to the markets, clearly Ashish believes that PSU banks is one pocket you need to stay away from. If you're a trader, probably you can look at shorting that sector. But IT is something that he's bullish on. But yes, overall market structure seems that there is some fatigue, there is some broader sell-off which can further rout the entire markets. But we'll see whether or not the Nifty tries to defend its important 200-day moving average. With that, it's a wrap. Thank you so much for being with Money Control, and stay tuned here for further news and business updates.
Thank you.